Hey, what's up, everyone? Today we're going to be talking about the current climate of the crypto industry. We got Hancock and Damien. Hancock's going to do some technical analysis on what's going on, and Damien's also has some really interesting things to say about what's going on in the world and contributing to this market fluctuation. So, what's up, Hancock? What's up, Damien? Let's jump into it.
Hey, what's
Yeah,
up, everybody? So it's me, Damien. Hancock's with me, or online here and here. So Hancock, feel free to go ahead and kick things off with how you. Let's start with how things have been from the beginning of the year, which obviously we were kind of coming out of 2021, which was a big bull run. Things were down, and then there's a lot of fear in the market because of interest rates rising. But clearly, there's been some developments since then that have definitely shifted the attention from that to some other things. And so it'd be kind of cool to hear what you have to say and what you think about all that.
yeah. I mean, as far as economics go and stuff like that, I feel like at first I was like super bearish, right? And I thought like everything's gonna like tumble down. I think in the end that still does happen. I just don't think we're there yet in the markets. Like if you look at like Spy and Tesla and all these right here, basically defying gravity. So a lot of these, what I've got here, especially for like Spy and stuff, I think they're already kind of on their way down. Um, as far as what I think is going to happen with them, I think they're going to pretty much turn into these like decline wedges that are looking to blast off. But this takes time. This type of move is like we could play sideways for like the next year in that type of environment. So we won't. I don't feel like we'll be reaching higher highs in the stock market, which means I don't think we'll be reaching higher highs in the crypto market. But I think that there's a range that everybody can play in and still make money in crypto and in stocks. I think a lot of people are doing that. A lot of people were not willing to accept this as bottom. They were expecting lower, and I do think lower comes. I just think it comes later in reality. Kind of to go to our discussion before we kind of got started, moving into people will be looking for outage or outs from their financial system in war torn scenarios and stuff like that. With the Ukraine situation, that kind of shows that that's a good possibility, and the government is accepting crypto. Um, at the end of the day, though, I think donations can come in any form. I don't feel they just have to come in crypto, although it does, bring a use case for crypto in a sense. But we also have to consider too a lot of countries that they end up in a war situation. There's a lot of countries that have EMP um, type weaponry, and if they really get into it, they could shut down any type of communications as far as internet or anything else. And then now they're kind of stuck, even if they were in the crypto space. They're unable to get the access to that. Now, could they get access somewhere else? Sure. But they would have to get out first. And if they don't have access to funds right away, they're not going to do that. So typically, what I think, from an economic standpoint, is a lot of people tend to do bank runs, which is when there's a war, they basically go down to their bank and they withdraw everything.
Yeah.
And that's typically what I see as the norm. I don't know if that's something that you agree with or
No, yeah, absolutely. Yeah, that's before we started recording, that's I think what we were both saying. Basically, as war emerges in any country, the first thing people are going to do is leave. And so what are they going to do? They're going to take their money with them, especially if their currency is failing, right? Which in times of war, that very well may happen as governments start to allocate funding from standard industries over and focusing on the military, and then also just investments. People don't invest in countries that are necessarily in the middle of a war. Only maybe in like some of their, if they have any companies that are producing assets that can be used by the military, because obviously they'll have guaranteed income. Um, Only those kinds of companies and stocks will rise. Outside of that, typically, especially if we're talking like travel, if it's like a tourist country, you could say goodbye to all the tourism, which is generally a pretty big part of some countries. So, yeah, bank runs definitely happen. People sell off the currency, and in the event that they can't pull their money out, then some people are going to be screwed. And that's, I mean, it's happened, I think, for forever, since really modern civilization really started uh, developing, but. It's only now with the internet that we actually hear about it, right, and care, as a collective, like, civilization, a global collective civilization. And so it's kind of interesting to see how things will differ. Like if you compare the emergence of like World War II and the economics then to now, I wouldn't say that I mean, the general fundamental sort of occurrence, like people leaving and taking their money out, yeah, but how people end up doing on the other side, I think is going to look a lot different now going forward, which is kind of cool to see. And then also, I want to have your thoughts on because and what I appreciate too about your perspective is how you always bring up the traditional financial markets, so stocks and whatnot, because they are highly correlated with crypto as of now. When do you think? And I have my thoughts on this, but when do you think that that will change, if ever?
I believe all assets will run together at a certain point, right? And right now, I see a lot of crypto running with tech. So and tech's booming.
Mhm.
If you look at
Yeah.
EV market and stuff like that, EV's doing really well.
Mhm.
Tesla's a great indicator of that. I know I got a lot of lines on my screen, but Tesla's a great indicator of the EV. Um, and then we've also got ones like Lucid. We got Rivian, and you see right here Lucid, and then you got Rivian over here. Rivian. Oh, that's not Rivian. That's Gala. I had Rivian. Let's see, right there. So Rivian's another good AV. So these right here, I think that these will ultimately kind of move. What I'm seeing right now, though, economically, is we're seeing what I think a slowing growth. And you can see that with these other EVs, while Tesla's booming because Tesla has connections, these other EVs are starting to fail, right? Um, I would say these create great buying opportunities for these EVs if they end up coming out on the other end of the tunnel at the end of the day. But at the same time, I think like Bitcoin and cryptocurrency should just be a portion of your portfolio, just like stocks should be a portion of your portfolio at this point.
Yeah.
Whereas
No, I
before
agree.
it was like, buy crypto during this season and drop it during this season. Now I feel it's more that you should always remain in crypto as well as stocks and everything else whole. And the other thing too I wanted to bring up also that I think is very important that a lot of people are kind of ignoring is what we call the yield curve and stuff like that.
Mhm.
But we've got basically that's our 2 year. I think I have the yield curve somewhere. That's our 2 year. Okay. So let me open it. Well, let me open the yield curve real quick.
Sure. Yeah. No, take your time, man. Yeah. In the
All right.
meantime, so,
Mhm.
you got it. Cool. All right.
So it's going to be the 2 and the 10. That'll kind of indicate that yield curve.
Hmm.
So we're kind of far out, and this yield curve is kind of the thing right now that's kind of making me think that we still have more upside in the markets. I just don't think like we're going to 100K BTC right now, right? I think that there's still money to be made, and it'll be in alts. I made a lot of good calls on alts. Ultimately, right here, here we go. All right, so this yield curve right here kind of indicates. Turn off the rainbow over here, but this kind of indicates basically the 2 year and 10 year crossing. And what we tend to notice with the yield curve is it usually kind of predicts a recession, more or less.
Yeah.
And we got basically '07 right here, '06, '07. And then when it pops up right around here is where you get the recession. So we got '08, '09, right? We can see right here, anytime that it's going to indicate a recessionary type environment, it's typically going to drop, right? So it was indicating over here in 19 that we were looking to probably hit a recession before COVID even hit, right? And
Mhm.
then over here in 20, they started pumping the market.
Yeah.
So what did that do? That stabilized the market, right? Now we're starting to see that yield curve again because basically them, you know, actually inflating the market with pumping money into it has pretty much kicked the can down the road. So now this is the new can. um they can't keep doing it, so at some point they're going to have to let this thing go, right? So now instead of us having our depression over here, where we would have been, we're probably going to be looking at something like a year or two from now, from what I'm thinking, right? So right now we're kind of dropping on the yield curve, and until this yield curve starts to come back up, that's where you need to start watching, right? So when this thing starts coming back
Mhm.
up right around here, as you can see where the activity kind of happens, right? That's the dangerous part to be in the market, because we're still in a free fall. I feel like there's still money to be made in the market because of that. Now these are different indicators that I kind of utilize that have kind of changed my position a little bit. The other thing is too, and I told a lot of people, and the other group that I'm in and stuff like that, I'm expecting 3% by May. So for the 2-year bonds, what does that mean? Well, what that means is, within 2 years or whatever on a 2-year bond, every 0.25% is basically how the Fed decides how he's going to rate hike. So every 0.25% is a rate hike. Is one rate hike.
Yeah,
So
25 basis points. Yeah.
if we take that 25 basis, right, and we look at this right now, what are we at? We're basically at 250, right? So that's 4.8. That's 10 rate hikes. That now this right here is with them just recently doing a 25 basis point rate hike. So what this is indicating to me, and I don't think it'll be enough to slow down the market yet, right? I do think it will be in the year, is that rather than the 25 basis point hikes that we've been getting, they may start implementing 50 basis point hikes. But do I think that's going to stop the market right now? No, I don't. Not anymore.
I,
They Go ahead.
No, I just wanted to say I concur, sir. Exactly. Like that's what I've been thinking for a good while, and it's pretty cool to hear you confirm that too with your own analysis.
Yeah. So I mean, with that, even with the 50 basis point hike, like I don't think it's enough. I think they're gonna have to come in with like a 2 or 4 or 5% hike to really slow down this inflation. The inflation just it's now they're offering people gas cards. I don't even know what to say anymore. Like you're fighting inflation and you're giving people more money for free.
Yeah. Yeah, exactly, dude. So I think that basically the government has kind of pigeonholed themselves in this state where they have to perpetually give money in order to fix what they basically used, or what they used to fix the economy last year is now causing issues this year, and now they basically have to constantly dish out money in order to keep everything afloat. Really, rather to keep people afloat. I think the social side of everything is impacting the decision making more so than ever because of like the prominence of people's voices on the internet nowadays, and like their ability to express it.
Well, I mean, we've basically got an environment where people are threatening these offices, their position,
Hmm.
right? They're like, current administration, we're not going to vote for you if you don't give us more free money. And they're like,
Exactly.
okay, we'll give you more free money. They're
Hmm.
destroying the country by doing this. They're
Yeah,
destroying our
dude.
currency by doing this.
Yes. Yeah.
And
Yeah. Oh, go ahead. Sorry.
no, I was going to say that if they don't stop at some point, it's not going to matter. You're not going to be able to inject enough money at some point, right? It's just
Yeah.
it's going to overinflate, and you're going to see this 2-year curve. We're going to go into a recession.
I,
That
I I do agree, and I think that I mean, if you historically look at everything, like monetary debasement has always been the strategy for fixing these kinds of like short-term problems, and though it works for a little while, it eventually ends up caving in on itself. So I do 100% agree that within the near future, whether that's 1 year or 3 years, right, even
yeah.
up to five,
Hmm.
there definitely is a cliff. Like we're edging toward that edge right now, or we're moving toward that edge, and at some point we're gonna get pushed over. Um, Now, along the way, what can happen on the government side to just try to keep everything afloat? They're basically in a floating, I'm sorry, in a sinking ship, and they're just using buckets to take the water out. Um, it's kind of the way that I look at it.
With cannon-sized holes in the side of the ship.
Exactly.
It's
Yeah.
it's literally flooding their ship, and they're just like running buckets up the stairs and three stories and throwing it over the board.
Yeah.
The ship's going down regardless. Um, if you look here too, my biggest fear right now is if we break over this. If we go over this, where do we go?
Yeah.
Like
Yeah. No, there's a limit, I would say, I mean, we reach points that we've never been at before, right? And then my hope, really is that the only other, like, I think realistically and very objectively, the only solution is to basically base the value of your currency on something else. And so like instead of, standard fractional reserve banking as we have now, like actually just shifting over to crypto and the financial infrastructure that it provides with all of its deflationary economics.
Mm.
I would think that perhaps, I would hope actually, that things do get severe enough that people get completely sick of inflation and want something that is deflationary. That way we never have to deal with this again. And so,
It,
ideally, obviously, in a perfect world, as an an ETH maxi, I would hope that it's maxi. But I think in the short term, it'll probably be Bitcoin, and then eventually, as ETH becomes even more deflationary than Bitcoin, perhaps it's combined with Bitcoin, and so we have both Bitcoin and ETH backing our entire global economy.
I feel like ETH has a place. I feel like if, and I say feel, but not my feelings, right? Just my thoughts. Um, I with Bitcoin though, it's finite, right? And and
Right.
believe me, I am the last person to tell you I'm a Bitcoin maxi. I'm not, but that is the one thing that gives Bitcoin its place, right?
Right.
Gold is scarce, Bitcoin is finite. ETH,
Hmm.
ETH is deflationary, but can also be, or sorry, inflated. It's deflationary, but can also be inflationary, right?
Right.
So
During times in which it's
under the
not
right
being used by.
circumstances, yeah, under the
Yeah.
right circumstances. Um, so with that being said, there's only one that's finite, and that's Bitcoin. Gold is not
Yeah. So,
finite.
mhm.
Metal is not finite. Now, are those things that you could trade if your currency collapsed? Yes, you could physically trade gold. You could physically trade silver, and you could physically trade copper, and you could trade anything that may hold some type of value in the world that somebody may want or need to do something with it, right? So those are things people need. They need those to be able to do things. They need those to make pipes. They need those to make watches or whatever, right? So these are things that are necessary in the world. That's back in the old days, the trading was trade you for something that you have for something that I've created or gotten, right? And the dollar needs something to hold it stable because
Right.
when you put it on oil, oil is infinite. And you could say, oh, there's only so much oil in the world. We haven't even tapped even close to anything as far as what the world contains in oil as a whole, right? So when we look at that, that's basically what they base it off of. And now we've got current administration, and I say current because I'm not getting into the politics thing, right?
Yeah.
But
Yeah. Let's
current
not.
administration now is looking at releasing 1/3 of our oil reserves into our economy too. What is that doing? That's more inflation. That's what that is. You're deflating by pushing oil into you're putting a band-aid on a stab wound. That's what you're doing. That band-aid is not going to stop them from bleeding out.
Yeah, he had released some already, and it helped marginally. I think just slightly, but I don't think that even if the entire reserve were to be released, that it would really make a dent in the lack of supply that we're seeing right now. And then furthermore, and I think this is from the producer side, right, from the OPEC side, do they want to risk producing more oil um, and end up having an oversupply when things do settle down, and then having cratered prices? Obviously, consumers would like that, but that wouldn't be good for producers. So, I think that yeah, I think high gas prices are here to stick around for a good while, to be quite
Yep.
honest.
Yep. And I do too. The thing is that the funny part is we, not we, but certain people in the government hate oil, right?
Yeah,
And
yes, exactly. And so the government's hesitant to actually do anything to support that industry and to produce more. Is
exactly.
that? Mhm,
But
mhm.
but the country itself is very dependent on it. You
Yeah.
cannot tell us we have to buy EVs when EVs are 100 grand a year. Most people don't even
Mhm.
make a third of that in a year in their entire yearly salary.
Yeah.
Like as much as we would like to, as much as people wouldn't care to if they could afford it, but people can't afford it. That's the issue. And it's not an affordable technology. So if it's not an affordable technology, you have to stick with what you can afford at the end of the day. Regardless, if I want to be the healthiest person in the world and I want to eat healthy, right? And I just want to always eat healthy. If I can't afford to eat healthy, then it doesn't matter if I want to eat healthy. because I don't have the means to do it. And that's probably 80% of Americans. They
Yeah.
seem to forget that only 1%, 1% of the world owns 90% of the capital in the
Mhm.
world. So if 1% of the world owns 90% of the capital, why are you going to tell 99% of the other people that they have to buy something that is way out of their price range of what they can afford? Right.
Yeah. Yeah.
And again, it's not a political thing, it's a reality check. Make it more affordable. You can't do that under inflationary conditions. You need
Yeah. Yeah.
deflationary
Exactly.
conditions.
hmm hmm Yeah. Very good point.
So the current
Yeah.
administration is making a mistake with what they're doing
In
in the
in
oil scenario.
oh, I see. Okay. Yeah. In releasing it from the reserve.
Well,
Yeah. I mean, I think they're trying
they
to
need
do
to
what they
support
can.
oil. That's what I'm saying.
Oh yeah, okay, yeah, no,
For
yeah,
now,
100%
at
agree.
least.
And that's where I think that, our last administration, that was something that they were hedging against in supporting oil. They were hedging against global catastrophe or in
Yeah.
problems such as this, right? Because it's like at the end of the day, having dependencies, right, where you need to rely on other countries for internally consumed commodities, it just leaves you at the whim of one, either them, or two, market forces that are just outside of your control, such as this kind of stuff, right? Um, yeah, it's kind of, I feel like I feel like the whole world really, their hands are tied when it comes to kind of like reacquiring control over what's going on.
But they're tied
Because
because of our current administration. That's why they're tied.
well, yeah, I mean, if everything ties back to the US
Hmm.
because of their influence on the rest of the world, 100%. And so yeah, it's kind of a shame, and then the worst part is, I think, and everyone will have different thoughts on this, but I always go back to, I look at fundamentals and the social layer a lot when assessing the market and making my decisions. And so like I think that there's so much, and I mean, and you see it in the administration, the liberal nature and the progressive nature, though admirable, I think in the long term, I think that it just comes with a lot of short term drawbacks that you just need to accept. It's like, okay, if we're going to, not support oil anymore, then these kinds of things, these high gas prices, guess what? Like that's gonna happen, and you can't have your cake and eat it too. Like you have to pick one or the other.
Yeah,
You have
but
to do your
giving
best in the
people
long
free
term.
money is not the solution.
I think it's a band-aid. It's another bucket, right? I
Hmm.
think, and that's all it is. And I think that people need hope, right? Like if let's say, oh, downstairs is more buckets, but screw it, we're not going to go grab them. And it's like, no, go grab those buckets. We're going to use them so that we at least feel better, even if it's futile in the long run, or, in the short term and midterm. It
Yeah,
at
but
least
there's
make
people
people feel good.
starving. Feeling good doesn't
Mhm.
matter if you're starving. There's people that can't afford to feed their kids. That doesn't make anybody feel good. I mean, there's people that can afford to live, but there are a lot of people that can't afford to live because of the inflation, and they're being left
Yeah,
out.
yeah. I wonder what the exact. I wish like a survey data could record that kind of stuff, those metrics a little more effectively. Um, but yeah, I mean, it's a shame, dude. Inflation's a terrible thing, I think, for those who are not already in a position where they have assets that actually benefit from inflation. It's quite literally a case in which the rich get richer and the poor get poorer. Um,
Exactly.
and I think that's, I mean, this is going into like, why financial education is important to be taught in high school. Um, that way people have an idea, because I mean, I know I've met some like 30-year-olds who don't even own stocks, which is just absolutely crazy to me. But I also do understand it, and I don't blame them, right? If it's not something that their parents showed them, and it's just not something that was in their field of study, or just not, it's under their tool belt or in their life, then yeah, it's just a shame. But I do think, I hope that the country does a better job of that. And I think that another thing that I'm hopeful of is that all of this turmoil compels people to start looking into it, and so that they can emerge from all of this with at least some more savvy and the ability to kind of either rebuild or to start new if they're young on the right foot.
Yeah, I
Yeah.
think that's like a great like view of the macro of what's going on. But what do you guys say we switch to like this last month specifically in the crypto market with kind of the bullish sentiment that kind of to me didn't come out of nowhere, but was like, wow, there's some activity. If you guys want to speak to that, and then where you see April, we're in April now. What are you guys feeling? What do you guys think is going to be coming about? Because obviously this macro is going to play into that, but it'd be cool to zoom in a bit.
Yeah, yeah. No, that's a good point. I do. By the way, Hancock, always appreciate your perspective on everything too. Because not too many other people, especially younger like us, are paying attention to a lot of this stuff. So, fun conversation. Um, so to kind of zoom in a little more, we're kind of emerging from a bit of a bearish trend, and I think it's a bit it's opposite of what you would expect. But let's specifically zoom in on the crypto market. I think that this recent bullish trend is mostly emerging, maybe from the merge narrative coming with Ethereum, because that's actually been on CNBC and other big news channels recently, news stations. They're literally talking about the merge, bro. That that's crazy. I doubt that even most of them understand. I think that what they're probably just arriving is that there's going to be some sort of supply shock. Um, and you talk about supply shock with people, and you say number go up, people generally start to ape in. Um, so that's kind of one of the only trends at the social layer that I've recognized that could be kind of stoking this recent little bullish trend. Hopefully it continues, obviously, because we're all invested into the market. But we'll see. I also think that, again, just all of yeah. So them talking about it in the news, the merge, and also the turmoil overseas, and all of it highlighting the utility of crypto. So I think those are the few things and I would hope that those are significant enough to impart into people that like these are not like these solutions that crypto provides are not temporary, right? It's not like handing out stimulus checks where it's a temporary fix. Like, no, this is like a fundamentally better infrastructure. Um, but would like to hear your thoughts on what may have caused this recent little bullish trend that we've been seeing, Hancock.
Um, I mean, with the current market, like I think the stock market initiated a lot of it, to be honest with you. We bottomed right around here. I was expecting us to pull back from the war. And honestly, after this wick and this wick, I bought back in around 35. So I dropped out right about here, got back in around 35. And when I say this, I don't mean just a Bitcoin position. I mean my alts and everything, right? I dropped my whole bag probably right around here once I saw we were going to break down again. So once we started looping back, I was like, oh, this thing's coming down. So I took my exit over here.
What caused you to make that exit? Just curious, just what signals you were looking for.
This move right here, this move right here, upside down.
Gotcha.
So
Cool. Thanks for
I was
clearing that up.
expecting them to I was expecting them to recover this money over here. The only thing is they didn't come down as far as I thought they would. But I figured, okay, I'll cut them short at 35. So I came in at 35. All right, I think it was down here. Yeah, 35. I came in at 35, and then they ran up and they ran down. And I was like, oh, I got in a bad position. But I did have a stop loss right around here. And then they pulled it back up, and I was like, okay. And we played here for days. So once we kind of got into this position where we played around here, I was like, all right, they ran up. And then once they made this move, I was like, all right, they're going to go up again. So because they stopped out right here, right? So you kind of got like a double bottom on volume right here on candles. So that's your first indication that they're going to try and push up on the next one. And then the next one became a complete engulfing, right? So they engulfed this entire side right there. Then they ran up and you could see the resistance. Look,
And when you say they, are you speaking of whales?
yeah, whoever's kind of playing the market, liquidating zones. In these areas right here, this was a lot easier to read based on liquidation zones, right? So there were heavy liquidations in here, right? People that were constantly just opening billions of dollars in longs, billions of dollars in longs, billions of dollars in longs at the top. But look how many times I highlighted this same zone. They just kept doing it and doing it and doing it.
That's pretty nuts.
And once they got liquidated enough times, they learned their lesson over here. There were not as many longs, right? So if there's not as many longs, which way are you going to drive direction? If there's not many longs and there's not many shorts in the market, well, you don't want liquidity to leave, so you drive it bullish, right? So they basically drove the market up. And as you can see, where did they come back to for liquidity? Right back in the same zone. Right there. Came back, hit the liquidity zone where they were liquidating people. Because guess what? Over here, when the market ran up, a lot of people did what over here? What do you think they opened over here? Well, they didn't open longs because they got liquidated multiple times, right? They opened a bunch of shorts over here. And what did they do? They ran through them all, liquidated them all. And then they ran the market up. And at this point, because I did have the market like this, right? Kind of like a going long. Like they were going to build like this and then go short. So rather than doing that, they switched it up and they went long, right? So I just readjusted my move. And rather than having this zone right here as my top and this is my floor and looking for a breakdown, I readjusted to an incline wedge. And as you can see here with the incline wedge, I based it off this top and this top, ran it all the way across, and where did they hit? Right in the top of the wedge, right? So they then rejected, and where did they support? In the same zone they liquidated everybody. Ran price back up, and now I think here we're going to see price action consolidate.
For those who
Right.
can't see, what's the amount? Was it around 44K at that liquidation point?
The liquidation I had I kept calling 44.5, but it's 44.449 basically is where they kept running to. And they were liquidating all over here, and you can see it plain as day, right? This is on a daily chart. This isn't on the hourly or 4 hourly. A lot of people are looking at smaller time frames. The daily is the one you want to read. And every time they came in for a move on the bottom, what did they keep doing? Kept forming higher lows. What did we notice about this zone right here? Well, look at the activity in this zone. That told you they weren't going to go lower here. Way too much buying. Buy, right? So every time they tried to violate the zone, they pushed it back up. Now, why do you think they pushed it back up over here? Because they didn't want you to hit their previous buy zone, which was over here. So basically, this is where they flipped the market, right? Ran it up. They try to come back, push it back up, hold it. And then right over here is where they're basically holding the market above that liquidity zone. So for me, you got your low, you got your higher lows. When they stomped out here, first indication, higher low. Right there, boom, ran up, right? Second indication, aka everybody said, oh, it's war. Has nothing to do with war, it's just price action moving. Right here, boom, come down, higher low. Come up again, higher low. And then on top of the higher low here, we got what formation? A W, right? W's tend to go up. What else do we got here? W here. W's tend to go up. So basically, there was just too much price action, too much consolidation, right? These kind of candle movements are consolidation. They're consolidating. These kind of candle movements right here are where they're liquidating this whole bearish zone, right? They're coming up, hitting it, hitting it, hitting it, hitting it again, and hitting it again. So they had to eat the sell wall here. This is how they did it. They ran up. These guys sold down. They let them sell down. They buy it back up, caught it, push back up. They sold down, caught it, bought it back up. They sold down, caught it, And then they just kept doing that until they got through the entire sell wall. Somebody wanted out in this price zone. So that's fine. Outside of that, I'm seeing this thing just basically we're going to kind of teeter here, I think. And you're probably like, well, how do you know we're not going to just go boom, moonshot? Well, if you look at BTCD tells us the other story. What does that say? Does that say Bitcoin has dominance, or does that say Bitcoin's losing dominance based on that candle? It's telling me Bitcoin's losing dominance. And you can see my whole move here. And I've had this on my Twitter and everything else right here, that they were going to make this move. I'm expecting this move to come all the way down to here. So if we form a lower low, what do you think happens to altcoin? That was our altcoin season in 2017-18.
Interesting.
So I'm expecting them to come down and retest that 35 and us to get our blow off top for alts, not Bitcoin. Not Bitcoin.
So let me just directly ask. It's April 1st. What do you see happening in April, and where are you watching? What are you doing? Because you reviewed last month really well, and that made a lot of sense. But what's the climate? What's the temperature? Are you waiting for another buy-in section, or
That's one of my calls right there. That's one of my calls right there. And I called these at the bottom.
Seller Network okay. I've been watching Seller Network. Damien.
This is one of my calls right here, and I'm expecting it to come way up here.
So let's lay these out. We got Seller. Do you see that entering another buy zone, or is that one?
Oh, you're invested in the Seller
again. I bought Seller all the way down here on the trend. Look how obvious that was. Hold on.
I was Courage is high, like really into Seller as well.
Look at that.
Yep.
And then what shape is this?
W, baby.
W. So I was expecting a full-on breakout for Seller.
All right. So for those watching, do you think there's still an entry point for Seller?
I mean, if it comes back to maybe 5 cents.
All right. And then what was the other one? Because we want some takeaways from.
What I'm expecting it for Seller here is this.
Big old dubs.
So I'm expecting, I have TPs sitting around here for Seller.
Gotcha.
If it can run there.
Yeah.
Now, I've been taking profit on the way up.
And then also just to give some color as to what Seller Network is, or Hancock, maybe you can speak to it. I don't mean to butt in.
Who?
So, like, with regard to Seller, like, are you is it just a trade for you, or is it something that you're long-term invested in at all? Like, what are your thoughts?
It is a trade for me, but I'll tell you that I do research on all these coins. I look for stuff that looks good on a chart, and then I go and I research it, right? And I want to make sure it's got solid fundamentals once I see it on a chart that looks good. So Seller and Edgeware, which is the other one I called, very similar, right? Where I saw Seller getting ready to boom was, if you look here, this is your biggest indicator right here. Look at volume.
Yeah. Volume. Yep. There's going to be some volatility either up or down.
Yep. But where were we at on the RSI? Where were we at on the volume?
Real low.
We were very low right here, right? As soon as we peaked just above the SMA here on the RSI, I was like, it's a go. And then it ran, and it's still running. And I think Seller still has gas in the tank to keep moving. There's a lot of liquidity up here by the VP.
100%.
Yeah, and what they're working on is definitely
yeah. So just to kind of give like a summary of what Seller's doing, because I've been invested for, I guess, probably a year and a half now. Definitely about over a year. It's 2022. No, it's been about a year and a half. So what Seller's doing is they've done a few things already. They have one solid, awesome working product, and that's C-Bridge. So that basically enables you to bridge your funds from one chain to another. But I call it omnidirectional, but it's cross-chain and cross-layer, meaning that you can go like right now, if you have funds on Ethereum mainnet and you want to go to Arbitrum, which is a layer 2, you got to go to Arbitrum, and then let's say you want to go to Polygon first for whatever reason, right? Ordinarily, using the standard bridge, you'd have to go from Arbitrum to mainnet, and then from mainnet to Polygon, right? And so that's not only two different, one mainnet transaction fee, which depending on how much you're moving, it may or may not make sense. But also it's kind of annoying and takes time, right? So with Cbridge, you can actually go directly from Arbitrum straight over to Polygon. And the best part is that you don't have to worry about like the minting of any synthetic tokens or anything like that in the whole process. You're actually getting the real asset on chain, on whichever chain you're going, which is pretty cool. And how that's facilitated is that they actually have liquidity that's provided by liquidity providers, right? So if you have a USDC or ETH or whatever, you can go ahead and decide to deposit that into the bridge, and then that'll be used to provide the asset to whoever is moving over there. So you have to, on the back end, on the technical back end, that money is basically getting locked up, and it's going to take a while for it to confirm, but it is coming. And so, like as a liquidity provider, you don't really care because Seller guarantees you that. But the user experience is just seamless. Like you can just bridge anywhere, anytime, and it only takes a few minutes, and the fees are extremely reasonable, which is pretty sick. And then so that's cool in of itself, right? Whatever, a fancy bridge. But what the real product is, because this bridge was basically just the backbone for their software development kit, which is going to be opened up pretty soon. They have the testnet already available. But this means that as a developer, you'll be able to very easily use cross-chain messaging, right? So you'll be able to send messages from one chain to another. And so what that opens people up to is the ability to, let's say, collateralize on one chain and borrow on another, right? Which is pretty cool. So let's say you have, I don't know, it's a bunch of collateral over on Aave you have a bunch of collateral on Aave on mainnet, and you don't want to necessarily take out your position just to move some funds over to another chain, let's say like Arbitrum or something. Instead, what you can do is just from your existing position, borrow assets and have them automatically pop into that other chain. And you would just basically do that at the click of a button from a user's side, user's perspective. And so that is kind of the holy grail that Seller's moving toward right now. So that was pretty long, but basically you move money anywhere, anytime, very easily. No more having to worry about like RPCs and setting up networks and bridging and all of that. Seller is basically eliminating that completely, which is pretty cool. Obviously, devs will have to build all of that, but they're building the backbone for that. And so you can kind of look at it as though they're building the like the fiber cables that run across the ocean right now around the world. That's basically what Seller's building. And so it's boring. It's not super sexy, but it's definitely a very, very safe infrastructural bet to have.
It's something needed in the space.
Exactly. Yeah. It's so necessary that it's not even
solving
debatable.
a problem. Yeah.
Yeah.
And that's really what you need to be looking for when you're looking for projects. You need to look for projects that are solving a problem. So typically that's what I'm looking for.
And then also just curious, as we kind of come to a close here, do you trade like derivatives or options or anything like that, Hancock? Just out of curiosity.
I do like calls and puts and stuff like that. And,
okay.
So these are things that I'm dabbling. I'm trying to dabble more in options. I'm not really big into them, but I can tell you guys like my secret to my trading, and this is why I do so well, is the biggest thing is low volume, guys. It's all it is. Like things run up, right?
Yeah.
Like look at volume here. Like it's starting to peak. We got almost no volume, right? But we're starting to see interest. The volume's starting to pick up right here. That's where you know this thing was getting ready to go. And so I grabbed this all the way down here because volume was picking up. I just didn't know when. That's all it is. So it's a matter of waiting beyond that. But outside of that, like almost all my trades, like look at this move right here for Edgeware, for instance. I just want to point this out. So I caught this right here. That's 100. Or sorry, this one isn't Edgeware. Sorry, what is this one? This is Rari. That's 109%, and Rari's not a very small cap, right? But I caught this one right here, way low. And then same thing with Edgeware, just point out. And I think Wilder still got some moves too left in it. Um, this right here is Ethereum. Look at Ethereum. You see all this liquidity right here on the VP? I think they're going to come all the way back up for Ethereum. So I think that they're going to go 10K. Probably not right now, but like I think we'll definitely try and recover all time high or come just short of it right
I
around here.
like what I'm hearing.
So with this right here, like I would probably do a take profit around 37.69. And then, if you want to be a little bit risque, you can even bump it up to like 4K. They might start getting some resistance around there. Flux is something else that's looking to break out. I'm just throwing out some gems. Gala is also looking like it's in the move, right? Sitting on the 50. 50 is bullish. Low volume, even though it's moving up. See the candlesticks are not very big. That's when you want to be getting in, right? That's where interest is starting to show. Edgeware, another one that I got. Look at this one. I caught this one right down here, right down there. Look at the volume drop on this, and look what it did, 341% on that move. So like, you just got to understand, like, when these coins make these type of moves, though, you should be out with your profit and your initial, and then you can leave a moon bag if you want, because some of these will just come right back down. But the VP shows all the volume right in here. Look at this spike right here. Look at how big this is. That they're coming back for that liquidity. That means they're going to come up, hit this liquidity up here, grab it all, and then yank price right back down again. Just throwing that out there for people trying to look for how to get into trades.
Yeah, and then also just to kind of share, so like this has all been pretty good info. I think it's been pretty comprehensive in kind of exploring the macro fundamentals, and then also kind of zooming in a little bit on everything, combining that with some of the technicals, and then you having shared some assets that people can take a closer look at. And then I think something that would be good to share with people is like risk management. So and this is kind of the reason why I brought up options. And so options are seen as a pretty intimidating instrument for people. There's also this really cool derivative. If you don't want to trade options, you can go to like Tracer and actually, so I use Tracer pretty frequently. And I was actually teaching Bunzi about this a little while ago, earlier today a little bit, or kind of just sharing a little bit. But let's say you throw, I don't know, like $3,000 into something, right? And you have like another $1,000 lying around that you want to play with. But you don't want to, in the event that you're wrong on that call, right? Let's say you say you buy at 3,500, right? And it starts to go up. That's cool. But then when you think things are going to start going down, or as you take that position, you can go ahead and go to Tracer. So Tracer DAO basically has fungible, it gives you fungible exposure to leverage tokens. So it's tracer.finance if you want to take a look. And so
TRACER.
yeah, exactly. Just like you're tracing something, tracer.finance. And so you can basically open up a leveraged position, either a long or a short position, without having to throw in as much capital. So let's say you throw 3,000 into ETH, and then you have another 1,000 lying around. You can go ahead and throw the 1,000 into a short position over here on Tracer, and you're basically going to be delta neutral at that point, right? But your risk exposure, your risk is limited to how much capital you've put on the short side, right? If things end up going way up, let's say ETH doubles, right, from 3,000 to 6,000. Okay, sure, you lost that $1,000 from your position over here on Tracer, but you also just profited an additional 2,000 from your exposure to ETH, right? So that's like a really good way to hedge, and then also if you end up going down, right? Let's say you bought ETH at 35 and then, or 3,000, let's just say for one, and then it goes way down, you're now going to be in profit because of your short position over on Tracer, right? So no, whether things go up or down, it doesn't really matter, especially because it's 3x leveraged, right? So you put 1,000, and now you have leveraged exposure up to 3,000, which is equivalent to your long basically, which is just your standard position in ETH. And so in that way, you can really benefit. And then when you start combining this with like Uniswap v3, you can even start to really offset things like impermanent loss, which is something that I like to do, especially when you're doing like opening up positions with assets that are both volatile. So like a recent one that I'm experimenting, I usually only do stablecoin with ETH, to be honest. That's mostly what I do, and then some stable coins as well. But you can open up. I opened up a little spot with. I found this little nice pool over on Polygon. In case people want to check this out, you can open up a Uniswap v3 position with Chainlink, and ETH. And then you can go ahead and get some short positions through Tracer on Arbitrum, and basically have that delta neutral risk management there too, which is pretty cool. It's so easy, dude. Like if they already have the tokens minted, you can literally just go pick them up on Balancer here on Arbitrum, which is pretty cool. But I definitely implore everyone to kind of take a look if they want to, hedge. Basically, that's the whole point of Tracer. It's not meant for long-term positions. It's when I'm buying this new thing in hopes that it goes up, but in case I'm wrong, I'm going to buy some of these short tokens here, so that I can go ahead and kind of hedge my risk and reduce it. So, or hedge my position. Sorry.
I believe
Reduce
they
your
have
risk.
something very similar to this on KuCoin too, as far
Yeah,
as
I
the way
don't know
they're
about
doing this.
I'm not super familiar with a lot of the centralized exchange
That was
instruments.
decentralized. Actually, they have no KYC on there. I don't know if you guys have utilized KuCoin before, but
No, I don't really use KuCoin. I try to stay away
Yeah, I
from,
do.
maybe a bit of a degen, but I just like using only DeFi at this point.
yeah, these guys don't require any real type of identification to sign up. They just limit like your leverage positions and stuff like that if you don't provide any type of identification.
Interesting.
Yeah.
Well, dude, this has been amazing. I'm gonna wrap up the recording around 1 hour, but if there's anything else you guys want to highlight, but yeah, like you mentioned, we went over a bunch of stuff. I'm gonna have it in the description. Um, and yeah, do you guys have anything else to add? What's coming in April?
Just alts, man. Just buy alts.
I love it. Yeah, I mean, that Rari call, a lot of these technologies Damien and I have been exploring with just building, right? So when you're building in the space, you get to see what's really functional and changing, and seeing the coins follow is pretty like amazing. I haven't purchased them. I've just been using them, like exploring the tech. So I'm gonna change that coming up. But yeah, you got anything else to add, Damien?
Redacted.
Yeah, that's Moon today too. Yeah, this has been a fucking great happy hour. There's been a lot of alpha in this one. Glad we
And
recorded it.
Tokamak and
And
DopeX.
yep. And then you want to review your coins again, Hancock, real quick?
So I mean, I don't think there's a lot in a buy. Maybe Rari is in a buy, like if people are looking for that. Edgeware, but I don't know the real interest in Edgeware. Like I said, Edgeware and Seller are very similar in the way that they operate. So I
Mm-hmm.
definitely implore looking into Edgeware because I think it's very similar to the tech on Seller, and Edgeware is dot. Just FYI,
Gotcha.
in case people didn't know that. So that's why I think it will be bullish eventually, just not there yet. And it's under a penny.
Let's go.
I know a lot of people like that. Wilderworlds, I think it's heading into a good position. I got Wilderworld coming up for this liquidity up here, probably around like $3 to $4.
Wow.
I would probably exit completely if it gets around that price, just saying, because it has good price action, but more than likely it'll get shut down right around here. And then because there's not a lot up here on the VP, so I'm expecting them to kind of try and come back down, hit this liquidity again before they try and make a bigger move, right?
Mm-hmm.
So it'll still be a higher low. It's just going to be this volatility.
Gotcha. What is Wilder?
It's a game made on Unreal Engine 5. Actually, it's
Ah.
yeah,
So
it's a really DJing game. So this is what I'm watching too. Desu. I bought some of this. Really low market cap, as you can see. This right here is basically a. I don't know if people should buy this yet. I don't, like, but I'm just taking a chance. I got some of it. but it's basically a betting platform, and this one does betting on games, does betting on not just video games, but also real games. You can do betting on play to earn games. You can do betting on just about anything and everything. It's pretty much the only decentralized betting platform out there.
Nice.
Um, when it comes to this, but definitely implore looking at this one too. I think this one's really huge. And I think it will be really big. It's just not a lot of people talk about it, and it's not really well known. But Wilder is this one. Sorry, I'm not trying to eat up a lot of time.
No, this is the
Just want
good
to give you
stuff.
guys some good info. But this is Wilder right here. So it's basically a metaverse, and they've already got some of their games out. But they got guilds, they got land, they got cribs, kicks, wheels. Like you
Oh,
can buy all kinds of stuff from these guys. So
yeah, they're hitting the
um,
hot topics for sure. That I can see that just from what
yeah,
I'm seeing. So
this
like
is a
right
big
now,
one.
this yeah, exactly. The NFT with the like shoe heads, I've been
Yep.
seeing quite a bit.
Sneakerheads. Yeah, that's
Yeah,
big.
dude, I can see that project. It just fits the collection model really well.
Exactly. Yeah, and these guys are built on Unreal Engine 5, so big, big, big stuff to come. I think with these guys, I think that this is one of the ones you don't want to really miss. Like people sit there talking about Star Atlas. I don't think Star Atlas has anything on this game, man. I think that this one's gonna be good,
I can see that too. Yeah, it
and
looks
all
clean.
NFTs too, by the way. So you get NFTs for land, NFTs for cribs, NFT for kicks, wheels, the whole nine.
I like this. And I saw you also were looking at Gala.
Yeah, Gala too. So Gala, I'm watching. Gala looks like a buy. It looks good. So definitely watching Gala. I might grab some soon actually.
Cool. So
But
some of the DGen calls Dexsports, Wilderworld, Desu, and Gala.
yeah, yeah, yeah.
Cool. And that,
Wild man, I don't know if I want to sell it though. Like to be honest with you, I might keep it at this price range because like look at some of these buildings right here. Like this one right here goes for $751.
gotcha. Well,
And
cool.
then think about that. If just to throw that out there, this 450 wild, if this ends up being $5 a wild, that's a
Whew.
lot of money
Yeah.
that this will be worth.
All right. I'm gonna sign off. Thanks for everyone tuning in. Thanks, Hancock. Thank you, Damien. If you have anything to add.
No, we're good.
All right. Thanks, guys.